Ngā mihi nui and welcome to Taua Sector Report and a special look at an annual gathering of our wealthiest dairy farmers. It used to be known as the Large Herds Association Conference. Now it's attended by so many heavy hitters in dairying that it's morphed into the New Zealand Dairy Business Conference. Find out why Trade Minister Tim Groser is so upbeat about the future for dairy product prices internationally. And meet an offshore dairy farming entrepreneur, Mark Townsend, who heads up a farmer syndicate having huge success with a large dairying operation in Chile. Correspondent Drew Chappell visits a highly successful Maori dairy farming venture just north of Lake Taupo and finds the Tuaropaki Trust also has a lucrative sideline in electricity generation from the region's generous supply of geothermal energy. But first, Trade Minister Tim Groser. Well, Minister, welcome back to the Sector Report program here on Country 99 TV. Now, just bearing in mind that we do seem to be in the midst of a commodities boom, as a minister, where do you see our trade position at present?
Well, I think the trade position is extremely encouraging. I know we've taken a real hit with the Christchurch earthquake coming on the back of all the problems associated with this massive global financial crisis, and we're still issues out there that have to be dealt with. But the one completely positive source of good news is how well we're starting this rebalancing towards higher exports. Now, I don't think we're seeing it throughout the community spread very quickly for reasons that the ANZ Bank pointed out very cogently yesterday, which was there is such a strong focus, and there needs to be, on restructuring the balance sheets of our rural farms, that these very high prices are not feeding through right now. But as the ANZ Bank put it yesterday, it's only a matter of time.
Well, when you look over the horizon into the future, say for the next 10 years, where do you see those prices going? Do you think they'll hold?
I think there are two issues here, John. One is the trend line, which is, if I can sort of illustrate it graphically, is going up. But the other issue is the volatility around that trend line. That is still scary and can be augmented by exchange rate volatility. So it's like a rising tide generally, but people have still got to make informed and prudent business decisions, because we saw commodity prices zoom up in 2008. Now, listen, I don't think there is a risk of a double dip recession globally any longer, but we saw them fall dramatically down in 2009. They're now well above the lowest point in February 2009. Especially if you look at it in New Zealand dollar denominated index. So the trend line is positive, but people have got to be able to have financial plans that deal with the volatility around that trend line. But you've got to see overall, this is a positive picture.
Well, you talk about farmers restructuring their balance sheets, I guess, to free up more money into the economy at large. How would you see them doing that restructure?
Everybody's got to play their part. And most importantly, the New Zealand government has got to play its part. I'm not going to start to talk in very political terms, but the day of money rolling up from the taxpayer into the government coffers, relentlessly increasing Crown core government expenditure, I'm sorry, they are gone. And we are in for 5 years of essentially flatlining government expenditure. So the government's 43% of GDP. The government has to play its part in balance sheet restructuring. With respect to individual farmers, I don't think they need to be told. They're doing it. They are reducing their debt. Now, this does mean that the throughput from this hugely improved international situation is a little less fast than would otherwise occur, but I think that the Prime Minister and all the ministers in the Cabinet, in the long run, would take a view that we'd prefer it to be done this way. We want sustainable wealth in this country. We don't want debt-fueled consumption, flash-in-the-pan stuff. So everyone's got to accept the next year or so it's going to be tough yakka. But I think there is a pathway out there. I'm optimistic.
Well, what do you make of Owen Glenn's assertion that we are living beyond our means?
Well, he's right. We are living beyond our means. But the alternative for us not to have been borrowing very substantially on world capital markets would have been to force an adjustment on the average New Zealand household, which would have been bitter and difficult for them. So we fully understand the point. Yes, we are accumulating debt. We deliberately made that political decision. Bill English was quite explicit on numerous occasions that his objective was, as he put it, to take the to soften the edges of the recession in terms of the impact on average New Zealanders. There is a price to be paid for that. We're paying that price in the form of higher debt. The thing is, do we have a plan to stabilise that level of debt and start to reduce it? And the answer is yes. And you'll see more evidence of this in the next budget, which is being discussed by Cabinet right now.
Well, just getting back from the economy to trade in particular, what do we need to be watching in terms of competition from other countries?
It's very unpredictable. I deliberately chose something for this audience that I knew none of them would have in their sights. Belarus. You know, a lot of New Zealanders have hardly heard of the place. And as it happens...
Right next to Ukraine, isn't it?
You're right. As it happens, we're negotiating an FTA with Russia, Belarus and Kazakhstan as they're a customs union. So, and Belarus cheese exports are now 7% of world trade compared with Australia with 9%. Their SMP, skim milk powder exports, at 80,000 tonnes, which have grown amazingly in the last few years, are 1/3 the level of the United States. And New Zealand has always seen the United States as the competitor. That's one reason I'm very pleased we're actually sitting down talking to these people, that we're not used to dealing with these people. So the competition can come out of anywhere. Once you increase real prices, you will induce supply. So I think New Zealand's got to be very nimble about this. I can't tell you precisely where the competition's going to come from. The answer is to be fast in our response.
Well, if we look particularly at dairying, is there a danger to us from developing countries pouring resources into their own homegrown agricultural enterprises? For instance, the Indians are starting to produce fresh milk in large quantities.
It's not a danger, it's a certainty. The level of growth in Chinese milk production is astonishing. In 2000, I stand to be corrected as a matter of detail, but my figures are not right exactly. They will be in the right ballpark. Their milk production was around about 1/3 of New Zealand. New Zealand produces 17 million tonnes of whole milk equivalent per year at the moment. Last year, China was 25. So they've gone from being 1/3 of our size 10 years ago to being far larger than New Zealand. They're growing their milk production at an average rate of 7.5%. Now, the reality is this, and this is what I was trying to talk to these folk about, is that this provides, first, traditional opportunities for increased exports. We will do this, we must do this. But the second thing is that since we're not going to stop this, that's why I said it's not a danger, it's a certainty. We're not going to stop this. This is going to happen. The big question for New Zealand, and a more complicated question, is do we want to share in that growth in the production?
Where are we at with the Trans-Pacific Partnership, which is really a multilateral free trade agreement? Is that ever going to happen?
Oh, well, how long is a piece of string? Trade agreements sometimes take years to come up. What we know is that the American administration, President Obama, is very keen to advance this by the time of the APEC meeting in Honolulu, right in the middle of our election campaign, by the way. How far we will get by then remains to be seen. We've had 4 or 5 rounds. A lot of it is highly controversial. We know what our targets are. We know what we don't want to see happen in that negotiation. But like all of these trade negotiations that I've been involved in over the years, I do not negotiate in the media. This is not a good idea for New Zealand.
A very upbeat Trade Minister Tim Grosser there. We're back in a moment with correspondent Drew Chappell's report on a rapidly expanding Maori dairying operation just north of Lake Taupo, with a sideline in geothermal power generation.
Kilometres north of Taupo, the tiny hamlet of Mokai is home to fewer than 100 people. It's probably the last place you'd expect to find a multi-million-dollar dairy empire, but that's exactly what's taking shape here. A newly formed Māori consortium is changing the face of New Zealand's agricultural landscape. and they could be changing the way we will think about farming in the future. Kingi Smiler is the chairman of the Miraka Corporation, a joint venture formed out of 3 independent Māori trusts.
So far we're within budget and slightly ahead of schedule, and certainly we're working hard to ensure that that continues to be the case, and as we will with all the challenges that we'll need to meet in the future.
It's been a long process, taking in all 3 years from the conception to the anticipated completion, set for August this year. Well worth the wait though, as the project will break new ground in every way. Now on the operation in Mōkai, it's an extremely unique setup, isn't it?
It's very unique, certainly using geothermal power, and we saw that as a strength of this particular way that we've organised to have the factory at Tuarapaki. Certainly it had strength, and obviously with environmental concerns about wastewater and waste, we're pleased that we're able to utilise the worm farms to deal with our DAF sludge, and we think, from an environmental perspective, this is certainly makes us a leading position to show how these things can be done.
From start to finish, the whole Miraka process is self-sustained and internally managed. Power for the new 1 million litre per day dairy processor is generated at the Tuarapaki Trust's geothermal plant. Adding to this, waste from the Trust's 30,000 cows is used to fertilise the enormous glasshouse complex next to the plant. This is as close as we could get to the geothermal power station, which will be providing the energy for Miraka's brand new dairy processor just down the road. Now, as the first of its kind in the country, you'd think they'd be eager for publicity. Not so, as the Tuarapaki Corporation is notoriously media shy. It's a setup which is unique to Miraka. So right from the very start, from the word go, I suppose it was always the intent to have things managed internally, from the energy supply to the waste disposal?
Energy is certainly going to be a major issue in the future, and so the opportunity to utilise the energy was important, and obviously what came with that clearly is that environmentally that has a carbon footprint is clearly a lot less than other energy uses, and so that was a natural positive to utilise. And Tuarapaki in their own right had been developing their worm farms, and we've been able to utilise that again, ensuring that we can integrate as much as possible, ensuring that our footprint has least impact on the environment.
Construction at the Miraka plant is on course for its opening date of August the 1st. Its arrival could change the way we think about dairy in this country, just as the government starts to look at the DIRA, which set up Fonterra. Under that act, Miraka plans to supplement its existing 32,000 strong herd with Fonterra milk. Kingi Smiler says while they benefit under those rules, things are about to change.
The review is taking place at the moment, so we have already had meetings with the Minister and with the officials. Our position is clear. I think the changes that are being made, we need to make sure are not anti-competitive. So we are comfortable that Fonterra want to get capital, and we don't have any issues with that, but certainly the proposals as they're stated at the moment, we see anti-competitive, both in terms of their what they're referring to as TAF, which is the trading amongst farmers, and with a discounted share price, we're concerned about how that might be priced into the price of milk. So we have some real concerns, and we would hope that MAF seriously take our concerns and work hard to ensure that they're not. So it's key for there to be open entry and exit, for there to be competition, and there won't be with these proposals from Fonterra.
Are you confident that the Minister will hear those concerns? Because, of course, you're not the only organisation that has raised them.
He certainly shares our concerns. It will be for his people to make sure they do a thorough investigation to ensure that our concerns won't be a problem for us in the future.
And it's not just the dairy side of the corporation under the microscope. In the recently released MAF report into Māori agribusiness, several areas of potential were discussed to improve productivity across all Māori land. Agriculture Minister David Carter says organisations like Miraka are providing a perfect example for other like-minded Māori businesses.
This is a very exciting development by Miraka. They've taken the opportunity of developing their own milk processing plant, by which instead of selling milk to somebody else to take some value add and profit, they're looking to value add themselves for their own productivity and profitability. I fully support what they're attempting to do.
The Minister says Māori culture differs in that it requires the land to be put first and foremost, before money and profiteering. In a country where the environment usually wins out in clashes with big business, Māori cultural values seem to be reflected in popular opinion. Kingi Smiler believes it's part of the New Zealand consciousness to place the land ahead of short-term interests.
Well, certainly we bring a different ethos, and our cultural values clearly are a consideration in the way that we think and manage our businesses. I mean, the basic business principles don't change, but certainly blending that with our cultural values certainly brings different perspectives that others don't necessarily have.
It's not just about the money, is it?
We all need to balance those interests, whether they be Māori or non-Māori, but certainly as we are kaitiaki and a guardian just for the next generation, it's clearly important that what we do for the next generation is it's left in a better position than it was when we started. And I think it's that long-term thinking which I think brings a totally different perspective about how we manage our businesses. And we're very careful to make sure that that balance is not, the short-term thinking isn't detrimental to those long-term views.
Welcome back. Mark Townsend is a Hauraki Plains farmer who heads up a syndicate of farmers known as Manuka, having huge success with a large dairy farming venture in Chile. They're farming 22,000 cows with plans for more than double that number. Well, Mark, welcome to the Sector Report program here on Country 99 TV. Now, first up, can you just give me an outline of the financial structure of your business, which I gather is a farmer syndicate called Manuka?
Today, Manuka's assets are around 400 million New Zealand dollars, and it's carrying about 120, 130 million debt.
Well, that's a pretty healthy ratio, isn't it?
Yes, it is.
How many farmers are invested in the syndicate now?
We started off with 12 or 13 initial investors, and then we bought a large 19,000 hectare property. We bought more investors in at that point in time. So we have around 100 investors now, most of whom have some relationship with the original 12 or 13 investors.
Well, what prompted you to look over the horizon to investment overseas in farming?
I guess we were amongst some of the first people to invest in dairy conversions in Southland in 1990. And that was the first experience of looking over the water at cheaper land and trying to work out what you could do with it. So really what we've done in Chile is not a lot different to what we did in Southland in 1990.
Well, I think you said that your farming operation's on the same latitude as Palmerston North.
That's right. And with the climate, halfway between Waikato and Southland.
Well, can you tell me a bit about the Chilean operation, particularly its scale, I guess?
Well, I think if you're going offshore farming, I think it's a huge opportunity for New Zealand to look at offshore farming. You clearly need to have some scale because there's overheads associated with offshore farming. The operation that we have there now, we're milking about 22,000 cows this spring, and we have sufficient land holdings to get us through to around 50,000 cows by 2018, 2019. And I presume that we'll buy some more land as well.
Why did you choose to invest in Chile as opposed to Brazil or Uruguay, where there are Kiwi dairying operations underway as well?
It was very easy for us to tick the boxes in Chile around the physical attributes around soil, climate, contour and things like that. Most of our due diligence actually went into the country
political stability, economic stability. If you're seeing people there, are they safe?
So was the price of land a major factor in choosing to move to Chile?
It was a significant factor. Chile actually has probably some of the dearest land in Latin America, but we were happy to pay that premium because of what we thought we could do with it agriculturally, but also we were prepared to pay a premium related to the economic and political stability associated with Chile as well.
Have you simply applied New Zealand dairy farming practices to the operation in Chile, or have you had to tweak a few of the things that you'd normally do?
It's pretty much a New Zealand system. There will be some things that will be a little different to New Zealand. For example, in general, the price of milk is higher over there than here because 90% of it's going to domestic consumption, and the price of grain is cheaper than what is here. So just think about those fundamentals, then probably the place of grain has a better value proposition than here in New Zealand.
What about the breeds of cow?
Genetics is one of the things that we need to work on. The quality of the animals is not as good as New Zealand, but we're using New Zealand genetics, and we're now milking first cross New Zealand animals.
Is the management all local Chileans, or are there New Zealanders on the ground there as well?
A mixture. Our senior management are Chileans, and then we have about 6 New Zealand share milkers, and we have another couple who have been in Chile for about 10 years who are on our senior management team as well.
Now, you've also invested in the USA and Russia. Can you tell me a bit about that part of the business?
The US model is quite different to the Chilean model. The Chilean model is, to some extent, a land play. As we increase the productivity of the land, the value of the land will go up. The US model is more of a cash model. There won't be the same.
That's in Missouri, isn't it?
Missouri, yeah. There won't be the same capital gain, so that needs to be a cash business. The Russian business, we entered that about 2006, and we exited that in 2009. And one of the interesting parts about our exit, we made a nice little profit on that, but the two parties who were bidding for our share were Hyundai and Mitsui, and we think of them as making cars and making diggers. But both those companies were financially incentivised by their Korean and Japanese governments to secure food for their countries.
You've told this Dairy Business Conference that now is the time for potential investors to look offshore. Why now?
If we don't do it, somebody else is going to do it.
That's pretty simple logic.
I think that the pressure on food will drive commodity prices. I mean, I think that the world is in such an interesting stage where, for the first time, developing economies, India, China, Indonesia, they're prepared to pay more for food than the established economies of US or Britain or New Zealand. The housewives, house husbands in New Zealand are complaining about the price of food. The price of food is going to go up.
Now, you talked about Fonterra and global farming. Where do you think Fonterra should be heading?
I think there will be some successful global farming companies based out of New Zealand. I think that Fonterra has the ability to take that to another level. For example, I would never lead shareholders to go and invest in some countries in the world because of the risk factors. But one of the advantages that Fonterra has that a group like Manuka doesn't have is that Fonterra has the credibility and the clout to do a Fonterra to a local government deal. And so I think that Fonterra might not necessarily have, today anyway, the farming expertise to be successful global farmers, but I think that they have the potential to be a cornerstone shareholding in some global farming companies, and there's potential to grow businesses, certainly controlled by New Zealanders and at least partly owned, that could become really significant businesses. New Zealand is short of scale businesses here. here's an opportunity.
Offshore dairying entrepreneur Mark Townsend. Well, that's our show for this week. I'll be back soon with our second Tower Sector Report program, talking to industry leaders at the New Zealand Dairy Business Conference. In the meantime, remember you can catch up with the program on our website. Ka kite anō.